This past week of Bitcoin had tons of volatility. We saw price spikes, price drawdowns, and price spiking back up again. Before we get into the data, don't forget that these weekly updates are brought to you by FTX. You can click on the link in the description to learn more. Now let's dive in and start looking exactly what happened in the Bitcoin market this past week. First, we can see that Bitcoin now trading just above $21,000. This comes after Bitcoin had dropped all the way below $19,000 just a few days ago. Bitcoin's market cap now sits right around $400 billion. The inflation rate still at 1.76%, and more than 90% of Bitcoin's supply has been issued into circulation. The real exchange volume in the last 24 hours is just below $9 billion, and Bitcoin miners have been paid $19 million in that same time period to continue to secure the Bitcoin network. GBTC is trading at a 34% discount, and Bitcoin is down 70% from its all-time high. If we compare Bitcoin, gold, and the S&P 500, Bitcoin taking a huge beating, down 54% from 1 year ago, gold and the S&P down just as much. What is fascinating about this is not only has Bitcoin outperformed over the 2 to 10 year time period, but gold over the last 10 years is down 1% in a decade. Not good for the gold bugs. If we then take a look at Bitcoin's price closing history, we can see that Bitcoin has traded above this current level for 582 days, meaning that if you bought Bitcoin 88% of its life and held it till today, you would be in profit. Lastly, we can go look at Bitcoin, gold, S&P 500, NASDAQ, and TLT. We see that the compound annual growth rate of 112% for Bitcoin, drastically outperforming for the last decade any of the other assets. And of course, that Sharpe ratio sitting at 0.8 or so, meaning that if you add Bitcoin to a portfolio, you'd get incredibly positive impact in diversification and potential risk-return analysis. Now, the big story this past week around Bitcoin was actually to do with regulation. We saw two major things come down. The first, SEC Chairman Gary Gensler at an industry conference on Thursday stated that he would be okay with the CFTC taking over regulation of Bitcoin and Ether. This would be the Bitcoin ecosystem getting that final check mark, saying that Bitcoin is not a security, and the CFTC would treat it as a commodity. It is very obvious that one of the biggest obstacles to more investors coming into the market is final regulatory clarity around Bitcoin's classification. We have had previous SEC and CFTC officials say they believe Bitcoin to not be a security, but to actually get final guidance and for the CFTC to officially take over the regulation of Bitcoin would be a big deal. It would open the floodgates for many investors to have that regulatory clarity, and then they could begin to allocate billions, if not trillions of dollars to the asset class. The second big story that revolved around regulation was the White House, which did a big study on how exactly Bitcoin and proof-of-work mining interacts with their climate goals. There was a mixed review from that report. There were some positive things talking about Bitcoin and proof of work and the ability to stabilize energy grids in places like Texas. But there was also a point where they discussed maybe Congress should put forward legislation to ban proof of work mining if they cannot accomplish their climate goals. Now, of course, I don't want the United States to become adversarial to Bitcoin proof of work mining. But what I do know is that even if they did that, Bitcoin miners would simply pick up and they would move elsewhere. We've previously seen this happen in places like China, Pakistan, and Nigeria. When China banned Bitcoin mining, the miners simply shut off their machines, they unplugged them, and they moved them somewhere else in the world. That is the beauty of a decentralized system. But I don't think the United States will end up banning proof of work. Instead, what I think will happen is that the educational efforts that are happening around politicians and industry executives will only further their understanding of how all of this works and what the potential benefits are. If you go and you talk to somebody in Texas, like maybe at ERCOT, which manages all of the electrical grid, they'll tell you that Bitcoin miners have become an important part of their plan to stabilize that grid, to make sure that they can prevent blackouts, and also to ensure that they can keep prices down in the most insane, vulnerable times for the citizens of that population. My guess is that regulation is coming for Bitcoin and the broader crypto market, but ultimately an asset like Bitcoin will drastically benefit. It'll get classified as a commodity, not a security. The CFTC will take over the guidance of that asset class, and many more energy grid departments will come out and say, we want Bitcoin miners. They're actually an important part of us making sure that we're set up for success in the future. Continue to watch the macro environment, but also make sure you keep an eye on all this regulatory talk. It has a huge impact on Bitcoin, and we will see more and more investors go ahead and allocate to the asset class once they feel like they've got clarity. I really enjoy doing these Bitcoin weekly updates, and I hope they're valuable to you. Every single week, these are brought to you by FTX US. FTX has super cheap fees, sometimes as much as 85% cheaper than their competitors, and they also have introduced digital stock trading. There's no transaction fees and there's no payment for order flow, meaning you get better pricing. Go check them out by clicking on the link in the description today, and I'll see all of you next Saturday for the next Bitcoin Weekly Update.